Hey everyone, my name is Mladen Čolić. I'm the head of FinTech at TransUnion Africa, and today we're really excited to be talking to you about the first of its kind FinTech study for the SA market.
Hi, I'm Ayesha Hatea. I head up the research and consulting division of TransUnion Africa. And we've done this global FinTech study across all our regions within TransUnion, in Hong Kong, in Canada, in India, LATAM. And we've now done it for South Africa, for the South African market, just to understand how our FinTech consumers are transacting with the institutions and what are some of the key insights we get from their behavior.
Ayesha, I'm really excited about the study. I think if we look at where we are from a FinTech perspective, Africa, Kenya, SA, it's booming right now. A recent stat that I saw as at the end of August, $2.3 billion of investment into the African market. That's tremendous growth. I think if we look at what's happening socioeconomically, geopolitically across the globe, people are looking at Africa as that next wave of innovation, next wave of growth, and we are really at the epicenter of these findings that we're finding from the study as to what our lenders need to be looking at.
Yeah.
How should they be looking at this consumer, and who is this consumer at the end of the day?
Yeah, that's a very good point. So that's exactly what our study tried to unpack. We looked at, our FinTech consumers, how they're operating it. We compare them to your traditional sort of banking, non-banking structures and how they're transacting with those. And we can actually see from a growth perspective that it's our FinTech market that's driving the growth, specifically in that short-term lending space. So for our study, we looked at consumers within the 0 to 1 month term loan and the 2 to 12 month term loan, just to narrow it down in terms of specific behaviors that we see within those cohorts. Yeah, so the initial points of our study does show the growth, with the skew towards FinTechs. If we watch the industry versus the FinTech growth, we do see FinTechs grow much faster. If you look at the overall sort of cohort, 70% of 0 to 1 term loans are sitting with FinTech institutions at the moment. So the study itself, we looked at 4.3 million consumers, and what we did is our control group, where we compared FinTechs to non-FinTechs. Our control group of non-FinTechs are consumers that have never had a FinTech. So nowhere in the history of behavior or transactability have they actually transacted with a FinTech. So we have a clean cohort of that consumer that's never used FinTech. And that was really the basis of our study to start off with. What we also tended to do is to look at what are the different perceptions that consumers have, and that sort of created, what are the tests that we're gonna analyze through our data.
Awesome. Look, really cool to unpack these. I think maybe if we take a step back and we're just not looking at the market itself. There are some absolute tailwinds that we're seeing in the market right now from a FinTech perspective. One, the investments. $2.3 billion as at the end of August that has flown into Africa. That's tremendous growth and a good sign that people are seeing Africa as that next horizon of innovation, growth, and we're starting to see that with obviously the flows that we're seeing in there. If we look at why, I think, you don't have to look very much further than AI, machine learning. The way that these FinTechs are so much more nimble and ready to interact with their consumer base is tremendous. I think one of the things that we're going to talk about today is, so we did an index of the volumes of inquiries as at Jan 2020 to Q2 of 2025 now, between banks and the non-banks. And a fascinating insight for me is where the banks are, they're 43% down from a volumes perspective, whereas the non-banks are 114% up from an inquiries perspective.
Yeah.
Now, when I looked at the data, there was a definite trend and a sway, and the jaws opened up between the COVID time and then later on.
Yeah.
For me, we could discuss what and how, but one of the key insights for me is that how ready the FinTechs were to tackle on the incumbents.
Yeah.
The tech first, the religious focus on customer experience and the customer onboarding, and we could clearly see that jaws opening up where the consumer was saying it's a lot easier for me to actually get a loan or a credit product with these FinTechs, and that's the data showing. I thought that was fascinating.
Yeah, and that's the thing. Consumers want that almost instant gratification. They want to go where it's easy. They don't want to wait in long queues. They don't want to wait like 3-4 days to get an answer on whether they approved or not. So they're definitely looking for alternative lending spaces, which is going to be easier and basically at their doorstep or in their hand for that matter.
You're spot on. So let's crack on. Let's get into the study. I think I'm super excited to unpack these assumptions or perceptions from the study. The first one was is FinTech the gateway to financial inclusion in South Africa?
So for that one, we actually looked at our new to credit base. So specifically consumers that never held any other products before, what is the first product they take? And surprisingly, they don't take it through FinTechs. 17% of new to credit comes through FinTechs, which is much higher than our traditional bank and non-bank spaces. But the majority of new to credit still comes through our retailers. And it's just the way they're positioned in the market. They are a good entry point, especially for the younger consumers who's taking out credit for the very first time. That's overwhelmed in terms of where do I go to, who do I speak to. But also the retailers themselves have a low to grow strategy. So they're able to offer very low loan amounts, and then help the consumer grow into sort of the credit profiles. So at this stage, even though we see the growth in the FinTech market and we know there's a maturity in that market itself from a consumer perspective as well, the new to credit base is still the retailers.
And is there a specific segment within the retail that's capturing the majority of the volumes for this origination?
So it's our clothing accounts. So 92% of retailers are in the clothing space.
And I think it makes sense. I think if we look at the landscape of South Africa, us growing up, we would go along with our parents, to the retailers and buy the furniture set or, so it's entrenched in our minds.
Yeah.
And as you grow, and to your point, I think, the retailers, they're around every corner, they're in your face, the customer journey is pretty seamless, and they offer a wider range. And I think the low to grow strategy has an impact in that. So that's a fascinating assumption that we debunked. What was the outcome of that?
So I guess it is nice because we talk about the convenience, we talk about all the digital things that come along with FinTech. And so we're not saying that, it's not new to credit and it's not, assisting with financial inclusion per se. We're just saying that it's not the very first credit product that they're taking. So, just a disclaimer on that side. So I definitely still think that FinTechs do have a strong role in terms of financial inclusion. If you think about why consumers choose FinTechs and why they go there, they are looking for those alternatives. They are looking at lenders willing to take on, the thin clients, the riskier clients, etc. And so there's definitely opportunities for FinTech to continue to play a role in financial inclusion.
Brilliant. I guess that also lends to the fact that, or tries to answer the question of, are the FinTechs actually playing in the same pot, or are they actually contributing to getting new to credit and a new cohort of consumers into the formal economy too, so we can grow, the financially fit, financially active member base or consumer base?
Yeah.
So that's fascinating. That's really cool for the first one. The second assumption and perception that we try to debunk is that FinTech consumers are riskier and younger. Take us through your stats.
If you look at our FinTech consumers, and again, when we compare them to our banks and our non-banks, particularly that are not defined as FinTech, we do find that the majority of consumers or FinTech consumers are below primes. So we do see that they are riskier from a scoring perspective. But when we look at an age perspective, they're very similar in age. We actually looked at the proportion of Gen Zs that the banks and the non-banks has, and there's not much discrepancy. So if we look at the overall perception, if we have to say a true or false, it's kind of like a mix. So they are slightly riskier, but they're very similar in age. I think the other thing that we looked at also was the tenure of the accounts. And quite a large majority of FinTech consumers have their account for more than 5 years. So there is some sort of entrenchment there as well from an account age perspective.
And that leads us really nicely to, I think, the third assumption that we try to debunk, and that's the access to credit. And the FinTechs, there's assumption that maybe they don't have access to credit as much as the banked consumer base. Talk us through that.
Yeah, so that's actually not true, right? When we looked at our FinTech base, 71% of them have more than 2 products, and 27% of them have more than 4 products in their wallet. So they're quite entrenched in the credit market. We also look at their products. They have credit cards, they have clothing accounts, and they also have other personal loans as well. So they are quite entrenched. So that's actually false. I mean, they are able to get credit everywhere else as well. It's not, FinTech's not sort of their default or their only choice. So we find that they're quite entrenched in the credit market.
That's incredible. And I think there are these assumptions, and it's so good to have these conversations. I think, what does it actually mean for our lending community, and how does the lender really understand that this customer actually is quite a mature credit consumer who has long-standing relationships or long-standing history, has multiple products in their wallet. Those are very different customer journeys, very different ways to talk to the customer. So these insights that we're surfacing, really, really cool, Ayesha.
Yeah, I also find it super interesting because I think, I have my own perceptions, you have your own perceptions, and we sort of operate that way. We think, because they are a FinTech customer, they operate this way. Because they're a banking customer, they operate this way. And it's really important for actually to truly understand what these consumers look like and how they operate. And sometimes it's not always like a one size fits all, So it's nice to get into these insights. It's nice to deep a little deeper and really get to know who our consumers are.
Okay, the next assumption, I think every credit head is going to probably be waiting for that. For the answer is the FinTech consumer performs worse on their credit obligations. True or false?
That is unfortunately true. So we are seeing higher delinquency rates within our FinTech market, and obviously, we'll get to unpacking why that is and what that looks like. And specifically, we looked at 2 months in arrears for consumers, and they did show higher delinquency rates versus a consumer that's in the banking or non-banking space. But what was quite interesting in the study, because what we also measured was the movement of their credit scores and the ability for them to increase their credit scores over time. And we actually found that the FinTech consumer was able to improve their score over a 12-month period at a higher percentage of the population than the bank or the non-bank. And so it talks to that consciousness about, yes, they're starting off with high delinquencies, but there's almost a proactive behavior for them to improve those credit scores over time and watch how their behaviors as well. So we don't want to just make that assumption on one. Yes, the delinquencies do talk to a bit, but I think there's opportunity to get that better if we understand their scores and their ability to approve it and their ability to create discipline around their repayments. There's definitely opportunity to improve those delinquencies as well.
That's a really powerful insight. I think maybe summing it up, they're riskier.
Yeah.
And it kind of makes sense. They're the younger, population coming in, so maybe makes sense. But for me, the key is there's a willingness. There's a consumer behavior willingness to get better, to show the right actions in order to be rewarded with a higher increase in your credit score, which unlocks other new products that where a traditional bank might look and say, these are the things that we're looking for. In the conversations I have with my FinTechs on a daily basis, financial education, financial inclusion, financial literacy,
100%.
main theme. So they want to leave a legacy of giving a client the access to the credit, but in a responsible way. And I think it's really cool that that's one of those insights that has surfaced. And kudos to the FinTech landscape and all financial institutions who are driving financial education and literacy as a major strategic pillar.
Correct.
Okay, now all the business heads are going to say, are these FinTech consumers loyal? What does the data show?
So that was also quite interesting because we also looked at 2 different lenses. And the first lens we looked at was, once they're in the FinTech ecosystem and they take subsequent products, so let's say 12 months after the original FinTech, what additional products do they take up? So in the 0 to 1 cohort, 0 to 1 month term cohort that we evaluated, we did see that within the next 12 months they do take up another 0 to 1 month loan, and 93% of those consumers took it up with another FinTech. And we do see that in subsequent products, and we saw similar behavior in the 2 to 12 month term as well. So there is some loyalty when it actually comes to staying in that FinTech ecosystem, when it comes to subsequent loans and subsequent products. So that was super interesting. But then what we did is we put a different lens to it. So we took a subset of consumers that may have a FinTech as well as a non-FinTech loan, and we actually monitored their delinquency rates, so the repayment rates, right? And the delinquencies for the non-FinTech were less. So there's almost a priority in repayment. Consumers are prioritizing the repayment of a non-FinTech over a FinTech. So they're loyal in terms of product and origination, but they're not loyal in terms of repayment. So that was super interesting. And the question is like, you know, you ask why, like what could FinTechs be doing to actually assist with that repayment over the life cycle of the loan?
Such a powerful insight. I think FinTechs and financial lenders spend so much time, effort, money in that front of the funnel, getting the right consumer
And it's working.
And it's working.
Yeah.
The customer experience is great, the UX is great, the straight through processing. So clearly they got a good recipe in terms of getting to the consumer, onboarding them quickly, because consumers like ease of use, to your point. I guess the account management strategies, you know, where are FinTechs potentially falling short? Why is the payment hierarchy on the non-FinTechs prioritized more? And, you know, that is a powerful debate to be having with our customers to understand what's the psyche, what is driving that? Is it loyalty in a different manner that's driving that? Is it perks? Is it value-added services? Is it, and you know, I think it's really powerful for the FinTech community to really understand, if I want to be top of funnel, if I want to be top of wallet and I prioritize, what do I need to do? So I think that's a really key strategy to drive, you know, performance to the bottom line, because you can get the great customer in, but if you're not keeping them.
Yeah, no, 100%. And I mean, that was the whole basis of the study in the first place, right? Let's understand what these consumers look like, how do they behave, and then the next question is, so what? So what do we do about this, right? So I think what was interesting is that we've shared this study with a couple of FinTechs, right? And when we go through some of these perceptions and we sort of engage in terms of, you know, what do you think? There was actually quite a bit of misalignment in terms of what they think, whether these perceptions are true or false. So the question then comes, how well do we know our consumers? And if we don't know our consumers, how do we manage our consumers? And so there's a whole conversation around account management and customer lifecycle. And the most powerful thing in those scenarios is data, is information. And that's exactly what we do here, what we try to achieve with the study as well, is to really unpack the insights, to give you the tools to understand what these consumers like, and to help strategize in terms of how do you actually get the best out of your consumer along their life cycle.
Couldn't have seen it better myself. If we look at where the FinTech market in Africa is going to be by 2030, $65 billion. South Africa, maybe about a $20 billion mark. That's incredible potential. If we can unlock that for the GDP, for unemployment, these are all flywheel factors that help us as a collective, as a community, as a society grow. So these insights that we took out from the study, the so what's, the reasons behind, really all go down to your point. The data, the actionable insights that you drive out of this data to make sure that the FinTech market is robust. It's going to be here for a very long time. It's going to grow. And we're super excited to be sharing these insights with our customers and seeing the impact that this will have at the end of the day. The consumer on the street getting better products, priced at the right price point for them, to ensure that we drive and continually drive the financial inclusion play and using information for good. That is what we do at TU, and we're super proud of that.
That's what we do. But thanks, Mladen. Thanks for the chat. I think it was the study itself was super interesting, but getting to share the insights is also a great opportunity. So thanks so much.
And thanks to your team for all the hard work behind the scenes, coming with us to our clients, sharing this knowledge with our customers. It's been invaluable having you part of this. We really appreciate it, and we look forward to the next one.
Cool. Thank you.